be just a second, y'all. Welcome back.
Thank you very much. Good to see you.
I've got a mint in my mouth. We don't have a trash can.
I never find it. I look all over the place.
That's right. Hi, good afternoon, everybody, and thank you for being here. As you are all well aware by now, Louisiana faces a more than $1.3 billion fiscal cliff on July 1st, 2018. The reason the April session is so critically important is it's the last fiscal session that we have before now and July 1st, 2018. And that cliff's going to be there because a significant amount of revenue falls off the books and the reductions to various credits and rebates sunset at exactly the same time. The daunting challenge of balancing our budget through spending cuts, savings, and revenue, while also funding the critical priorities that we have, like TOPS, for example, is not an easy task. It requires us to go beyond simple talking points to evaluate our priorities for the people of Louisiana. It takes long hours of combing through the budget, tax expenditures, and soliciting input from a wide range of stakeholders, from legislators to businesses and community leaders to advocacy organizations, as we have done. I have traveled to every region of the state to meet with and listen to legislators to ascertain the best approach that enjoys the most support from the legislature. As we set on this task, our work was based on the notion that we simply cannot continue down the path that we're currently on, that something bold has to be done to stabilize the state budget for the long term. Thanks to the hard work of a task force created by the legislature last year, we've got the blueprint for how to get this done. Now it's up to us to find the courage to make the decisions to bring stability, predictability, and fairness to our state. Our problem is easy to identify. We're operating under a broken, outdated structure that simply doesn't work for Louisiana any longer. So today I'm making a series of proposals, primarily based on recommendations from the task force that the legislature will consider to modernize our tax structure and put Louisiana on a stable path. I am proposing that we allow the fifth penny of sales tax to roll off on July 1st, 2018, as the legislation requires and as the task force has recommended. By doing so, we will no longer have the highest combined sales tax in America. I propose further that we eliminate the deduction for federal taxes and lower the personal and corporate income tax rates, expand our sales tax to include services modeled off the best practices of other states. I propose that we clean up the remaining pennies, make permanent the reductions to credits and incentives that are scheduled to expire next year, repeal certain credits and exemptions that are on the books but are either no longer used or don't provide enough return on their investment to justify their continued existence. And I further propose that we implement an activity tax on entities doing business in Louisiana, a move that will include a phase out of the corporate franchise tax over the next 10 years. This is a fiscally responsible approach to bringing our system into the 21st century. This plan is designed to bring much needed stability by broadening the base and lowering the rates to ensure that we can make strategic investments in education, health care, again, programs like TOPS, to keep Louisiana's best and brightest here at home. By eliminating the corporate franchise tax, we are positioning Louisiana businesses to be more competitive in the global marketplace. Most importantly, this plan provides for the stability and predictability that we've been lacking for too long in Louisiana. The plan. Let me start by saying that this plan needs to be viewed in its entirety. This is a comprehensive approach to solving for the $1.3 billion fiscal cliff. In addition to that cliff, we're also $440 million short of maintaining our current level of services and affirming our priorities for next fiscal year. For example, if we want to fully fund TOPS and if we want to make good on our commitment to investing in K through 12 education, we simply have to identify new revenue. Last year, the legislature approved an additional penny of sales tax. While it was the right move for Louisiana at the time, we all knew that it was a short-term fix to partially address the historic $2 billion budget deficit that I inherited. The legislative task force and I agree that it would be in the best interest of the people of Louisiana to remove that fifth penny of sales tax and move to a more predictable overall tax structure. In removing the fifth penny, we will also model our state sales tax off of best practices used in other states, including our neighbor Texas. And that means expanding sales tax to include services, but not a sales tax on the internet itself. Services now represent almost 2/3 of consumption, and it's time we expand our tax base as we reduce the rate. Further, I propose to clean the remaining 2 dirty pennies. The 4 pennies of sales tax that we will retain will all have the same exemptions and provide for ease of administration. Under the plan I'm proposing you today, more than 90% of individual tax filers in Louisiana would see an income tax cut. I'll say that again. More than 90% of individual tax filers in Louisiana would see an income tax cut. The current rates of 2%, 4%, and 6% would be lowered to 1%, 3%, and 5%, while eliminating the deduction for federal income taxes. Overall, this is a revenue-neutral change to the individual income tax, but it is a recommendation of the task force to expand our tax base and lower rates. This reduction in the personal income tax rate will put more money into the pockets of hardworking Louisianans all across our state. For far too long, the people of Louisiana have footed the bill for costly tax credits and exemptions, while too many very profitable businesses don't pay a penny of income taxes. Currently, only 3 states in the entire country allow full use of the deduction for federal income taxes, and with a budget crisis as large as ours, it no longer makes sense for Louisiana, especially if we can give up that deduction and lower rates across the board. My plan calls for the elimination of the deduction for federal income taxes for corporations as well. But in doing that, we also propose to decrease the current 5 brackets and rates of 4%, 5%, 6%, 7%, and 8% down to 3 brackets and lower rates, 3%, 5%, and 7%. The central piece of this plan involves leveling the playing field that has been unfairly tilted toward the big guys, but doesn't cause them unnecessary harm. It simply asks more businesses to do their part. Let me spell this out for you. In 2015, there were 149,287 corporate tax filers in Louisiana. Of that number, more than 129,000 paid absolutely nothing in state income taxes, meaning that the average middle-class income earner in our state paid more in income taxes than some of the largest companies doing business in our state. Let me repeat that. In 2015, there were 149,287 corporate tax filers in Louisiana. Of that number, more than 129,000 paid absolutely nothing in state income taxes, meaning that the average middle-class income earner in our state paid more in income taxes than some of our largest companies. To ensure that everyone is doing their part, I'm proposing that we simplify the process by implementing a commercial activity tax, or a CAT, on each business entity doing business in the state based on their gross receipts. Now, I know there's been a lot of talk about the gross receipts tax and whether or not we were going to follow the task force recommendations or put them on the shelf. I am not putting the task force recommendations on the shelf. In fact, the overwhelming majority of my plan embraces aspects of the task force report. I'm certainly including the task force recommendations in this plan, and I'm adding to them by recommending a commercial activity tax based on gross receipts calculation. We've modeled this approach based on best practices from around the country, while making certain adjustments that will ensure that everyone pays their fair share and does not overly burden the small businesses or certain sectors of the economy. This is how the commercial activity tax will work. We will retain the corporate income tax, but any entity making less than $1.5 million in gross receipts over the year will pay between $250 and $750 in a minimum commercial activity tax. That's it. They won't pay more in business taxes to the state of Louisiana. According to the Louisiana Department of Economic Development, there are 414,000 businesses in our state. Of that amount, at least 389,000 small businesses have less than $1.5 million in gross receipts. The commercial activity tax, the CAT, for them will be the minimum commercial activity tax, a small fixed amount ranging from $250 to $750. For entities grossing more than $1.5 million, there will be a commercial activity tax amounting to 0.35% of gross receipts, or the entity's calculated corporate income tax, whichever is greater. And let me say, we recognize that there are businesses out there with a high volume of gross receipts but with a low margin for profit. Our plan will allow for a separate calculation to ensure that these businesses are not asked to pay more than their fair share. The details of how the plan will affect those entities will be available to you in the coming days. We will make permanent the reductions to certain tax credits and rebates that are set to sunset next year and scrub the tax code of unnecessary and wasteful incentives. Finally, we will propose a better path forward by budgeting, and in terms of our budgeting, by requiring that the state budget no more than 98% of recurring revenue that's forecasted by the REC to address the state's emergency needs in times of disasters and to avoid mid-year cuts with that 2% holdback. To be clear, I will not accept a plan that implements this budget proposal for this fiscal year. This proposal would kick in when the revenues are stabilized and sufficient. This is a package solution for long-term stability for our budget, our economy, and our citizens. Now, I recognize that not all of the items recommended by the task force are being proposed in this plan, and I also know that there's a new idea being introduced. But I'm also realistic about our ability to make the kind of changes that we need. This plan provides a solid mix of recommendations made by the legislature's task force and new ideas built on best practices from other states. As I've said, the task force provided the blueprint. Now it's up to us. We know what the alternative option is if the legislature does not act. One or more special sessions to address yet another shortfall using the same proposals that we've seen year after year. We have the ability to end that cycle. We cannot pretend that we can only cut our way out of this problem or continue to provide the services our constituents need and deserve. We've been cutting funding for services for the last decade, including cuts of more than $633 million to higher education since 2009. And over the past 15 months, since I've been governor, we've cut over $500 million from the budget. And those cuts are after the savings the state has realized from Medicaid expansion that totaled over $200 million for this year and will exceed $300 million in savings next year. Without those savings, we would have been forced to make further reductions to state services. And just last week, a legislative oversight committee voted to undo a $2 million cut to the Department of Health. There simply are no easy options left. So the legislature has to dig deep down to its core and decide whether it's going to make the bold changes our state needs or continue down the path that we're currently on. And I have traveled the state over the last few weeks to solicit input from legislators. And there were very few voices of dissent to many of these proposals. And there were no proposals given to me by the legislature at all. I am committed to working in good faith to get this done and willing to incorporate constructive ideas from anyone in the legislature. I absolutely am open to compromise, but I'm asking the legislature to come on April the 10th with an open mind and a willingness to do the work that they said we needed to do last year when they created the task force and created a temporary sales tax. In short, I'm asking that we come together and work in good faith. I'm confident that we will, and I'm also confident that we are going to fix this problem, put our state on a path towards prosperity, restore stability and fairness to the state of Louisiana, and give us the opportunity to adequately fund our critical priorities going forward. And with that, I am happy to take questions. And Tyler, you put your hand up before I even said I was ready to take questions. Yes.
Unless I missed something from the sheet here, I'm not clear where you make up, what is it, the $1.2 billion, or is it an extra 440 beyond that?
I'm not looking at the sheet that you have, and I don't know whether the Secretary wants to address that. I can tell you, in short, the business activity tax, commercial activity tax, is designed primarily to replace the revenue that's lost when the penny falls off the books. The rest of the revenue that we need comes from the other measures that I talked about, like cleaning up additional pennies, making sure that the haircuts on credits and rebates and incentives gets carried out forward as well.
Can you or somebody else be more specific in what those numbers are, and you kind of make up 1.2 billion, or is it that plus 440?
Well, we have to fix the 440 for next year as well. And the Secretary's here. I'm going to let her come up and address that question. Everybody understands it's the Legislative Fiscal Office that scores these matters. And that obviously hasn't happened yet. It will happen over the next couple of weeks. But clearly it is our goal to fix the cliff and to make sure that we have the ability to fund the $440 million in unmet need that we know that we have, just to provide the same level of services.
Tyler, I knew you'd have the first question. The differences that we're talking about, the commercial activity tax is designed to replace the $880 million in revenue that's rolling off when the clean penny does. That $440 million is for the FY18 budget. The cliff actually affects the FY19 budget. So there's two different sources of revenue that we're talking about. So when you look at those numbers together, you look at 440 for next year and whether additional revenue is increased, including expanding the tax base to services and cleaning the remaining 4 pennies, the remaining 2 pennies. The sales tax, the 5th penny actually rolls off July 1, 2018, and the commercial activity tax would be effective to affect that roll-off.
Sorry to keep pushing on this, but, okay, so I understand when the penny goes off, under your plan, the cap would replace that. And if my math is correct, that's $880 million of the 1.2 billion, so what's the difference of that?
So we will, we will start the changes to the other sales tax, the expansion to services. That's 200. We're also going to clean the remaining pennies, so that's 180 million. The existing 2 pennies that were cleaned up will continue under our proposal starting July 1, 2018. So all 4 pennies would be clean of those exemptions, and so that would be the numbers that would roll into the FY19. And those service taxation and the additional pennies, that would start in FY18. So that's where that 440 comes in, Tyler.
And I think that's the answer to your question, Tyler. If the sales tax changes we want to make with expansion of services and cleaning up the additional pennies, that would start October the 1st of this year, so that that money is available to us in the fiscal year that we have the $440 million problem. And I'm sorry, I didn't didn't fully understand your question until I stood back there and listened to it again. Yes, ma'am.
On the sales tax stuff, are we cleaning the pennies, the existing pennies, the way we did last year? And what services are we expanding the sales tax?
Okay, the answer is yes. There are certain constitutional exemptions that we're obviously not going to touch. We wouldn't propose to. Those typically being food for home consumption, residential utilities, and pharmaceutical drugs. And there are some other exemptions off of the pennies that we wouldn't touch. But what we want to do is we want to make the base the same, uniform across all 4 pennies. So if you look at the clean pennies we have now, the proposal is to make all of the 4 pennies look like that. And so we would obviously lower the rate from 5 to 4, expand the base. The services are those, and there really isn't anything new here. Those were the services that were identified by the task force looking at the state of Texas for the services that would be subjected to the sales tax at the lower rate once the 5th penny falls off, obviously. One thing that I added in my talking points, because I didn't want this to be missed, I believe if you just look at Texas, they do have a sales tax on internet access. That would not be part of our proposal. Sue.
All right, yeah, okay. The new Louisiana survey is coming out in its segments this week, and the most recent thing that they've given us shows that people are willing to approve taxes on themselves as long as they know where the money is going. Yet we've had this long-running battle over, we can't get at the money because it's all dedicated. How are you going to persuade the public to persuade their lawmakers that making these changes is going to benefit the programs that they say they want to see benefit?
Well, part of that is the education process that takes place in the legislative session itself when the Appropriations Committee and the Finance Committee meet, and they talk to all of the different agencies and higher education and you name it about what would happen without the revenue that we've identified as falling off in that cliff. Secondly, it is very important that people be reassured that if we are asking for more to make sure, for example, that we don't further erode state support for higher education and put more of the burden on students, that is in fact what we do. If you look last year, despite the $2 billion historic budget deficit that I inherited, we stabilized funding for higher education. The tuition increases were the lowest we've seen in almost a decade as a result of that. But what we didn't do was fully fund the TOPS program. Even though I had recommended the legislature do that, we funded 70% of it. We were $90 million short, and then we put almost all of that $90 million in the spring semester, which caused an undue hardship on those students and their families. We've got to get back to honoring our commitments to those people. And I am aware that the surveys that you're talking about indicate that the people of Louisiana are open to new and more revenue so long as there is a balanced approach where there are cuts as well and that there are savings wherever those are possible. And that's why we will continue to take the balanced approach that we've taken before and make sure that we are going to be identifying savings and efficiencies, that we are going to be willing to make cuts, in fact, including annualizing some of the very painful cuts that we took in the current mid-year for next year. I'm sorry, let me go back here because I...
No problem, Governor. No state in the country taxes agricultural inputs, feed, seed, fertilizer.
And we won't either.
This would not apply
No.
to that, even backdoor on the sale of fertilizer, having to pay tax on those receipts.
We're not taxed, the gross receipts tax is not based on the sale.
Yeah, I'm going to first of all, I know there was some misinformation that came out from my friends at the Farm Bureau, and that may have caused the question. I'm going to let Kimberly respond to it, but I can tell you at no time were the sales tax exemptions relating to agriculture in discussion in terms of eliminating those exemptions, and she'll explain to you how this will work on those entities.
Yes. On the agriculture exemptions, those are sales tax exemptions. There's no change to those exemptions. They will still be fully in place as they were under the exemption changes we did last year when we cleaned pennies. They will still be protected. Now, the gross receipts tax will apply to all business entities, but there are certain business entities that we will be looking at an alternative approach. Instead of the gross receipts model, a different calculation for those businesses. But if some of those farm entities are already paying the commercial or the corporate income tax, they would continue to pay that tax. This is an alternative calculation method for the corporate income tax.
So it wouldn't affect, say, a fertilizer company selling its fertilizer having to pay a tax on the receipts?
The fertilizer company would pay tax on its income or its receipts, depending upon how that company is structured. But that fertilizer company is paying tax. The farmer buying the feed or the seed or the fertilizer is not paying that tax.
But wouldn't the company just pass the tax on down to its?
Whether a company passes tax, be it an income tax, be it a severance tax or a utility tax, that is something that the company does. We're going to make sure that this tax stays at the entity level that is required to pay it.
Jeremy?
Secretary, unless the governor can answer this. On the minimum commercial activity, I'm sorry, on the minimum commercial activity tax, how many businesses fit in that, I guess, small business category of 1.5 or less, and what kind of levels are you looking at? Is it going to be brackets of equal size and assigned a dollar amount?
Yes, so I think the governor mentioned that we have about 389,000 businesses that have gross receipts of less than that 1.5 million. So we're talking about a small segment of the business population that would pay above that 1.5 million. But for those, they would pay for 0 to 500,000 in gross receipts, they'd pay $250. 500,000 to $1 million, it's $500, and $1 million to 1.5 million is $750. Those are the minimum tax rates.
Yes, ma'am. I have two questions about the individual income tax proposals that y'all have as combined. One would be, what is the increase in revenue the state if both of those items pass? The other one is, you said it was a 90% cut, actually, for 90% of taxpayers. At what income do folks actually start seeing an increase?
So that is a revenue, actually a revenue negative proposal. It is not raising income. And the revenue numbers as to when those kick in, I think 140,000 in gross income, adjusted gross income would be the level at which someone may start seeing an increase in their taxes under that proposal.
But do you know what the negative revenue is, since I'm asking?
I think it's 42 million negative. And that's the number from the Legislative Fiscal Office.
But if you combine that negative with the very small positive on the commercial side, when we lower rates and get rid of the federal income deduction on the corporations, it's basically a wash. If you take those two measures together, they're almost completely revenue neutral.
Is this part of selling, because this does require vote of the people to get rid of it?
Yes.
And I know that lawmakers and y'all have said in the past that in order to sell this to the people, we've got to make it revenue neutral, or if not revenue negative. So it is actually, no one's getting the taxes increase at all on this?
No, there will be some taxpayers at the higher income levels that would pay more as a result of the impact of the federal deduction going away. But for those taxpayers that are under that $140,000, they're seeing a tax break.
Yes, Melinda?
So I think I have two pieces that I'm hoping y'all can run through again. One, does the expanded sales tax on service start taking effect before the fifth penny rolls off? And then the other piece is, can somebody walk through again how the gross receipts tax interplays with the corporate income tax? Like, would some
Okay.
company be paying both of those?
I'm going to answer both of those questions, and Kimberly, on the second part, you make sure you're listening carefully so that I get it right. I think this was addressed a while ago to Tyler's question. What we would seek to do on cleaning the pennies, the additional pennies, and on expanding sales tax to services is have those effective October the 1st of this year. That's the way that we address the shortfall for next fiscal year. And then as it relates to whether corporations would pay both the commercial activity tax or the income tax, the answer to that is no, that with respect to corporations, this functions almost like an alternative minimum tax, where they would continue to calculate their corporate tax liability just as they have, but then they would also have to do the gross receipts approach to see which one results in the higher tax bill. That's how we are going to bring some of these companies into play that are not paying today.
Last question.
And you get it, Greg.
I appreciate it. So if your entire plan was approved by the legislature and other people, how much total would that raise? If the entire plan was passed?
Well, it would raise enough to fix the cliff that we identified, and it would raise, yes. And we would start it early enough that we would also pick up the money that we need next year to maintain the current level of services. And that's the answer. And the Secretary has modeled that, and as I mentioned before, the commercial activity tax is designed to replace the penny that will roll off. And we obviously have to work with the Legislative Fiscal Office to provide them the information that they need to score these to see what, with more precision, I suspect, what these would be calculated to raise. Anything to add to that?
I think that's it.
Okay.
They're just upset that there was the last question.
The questions can keep going, and this is kind of complicated stuff.
I'm going to be here. The governor's leaving.
I feel like businesses are gonna say that this hammers them in some fashion, and I guess I just wanted to give you all the opportunity.
Well,
So much of it seems to be on their end where you're gonna raise money.
well, I will tell you, the businesses are going to benefit from the elimination over 10 years of the franchise tax. They will benefit from the reduced penny. They are going to benefit because there will be an approach to business utilities so that the utilities used in the industrial process or the manufacturing process will be taxed at a lower rate, not on the full 4 pennies. They will also benefit from a rebate on the sales tax as it relates to manufacturing machinery and equipment. But I would just, and I did say it twice, but I'll say it a third time. In 2015, there were 149,287 corporate tax filers in Louisiana. Of that number, more than 129,000 paid absolutely nothing. Now, what this approach is designed to do is make sure that those entities pay something, their fair share. Otherwise, it is inevitable that the individual taxpayer, middle class and below, are paying more than their fair share, and in many cases paying more than some of the largest, most profitable businesses in the state of Louisiana.
Could you maybe give a little more of an impassioned defense of Laney Keller's editorial this morning where he said that you shelved fiscal reform? And I know you said this doesn't, but maybe, I don't know.
Well, first of all, I've been a little busy today. I haven't read his editorial, but I would absolutely reject that. And I don't know how he could write it before he knew what the plan was. If you will take a look at this approach in its totality and compare it to the recommendations that came from the task force, you will see that there is a very, very close connection between the two documents. And just about everything that we are proposing comes directly from the task force. Now, we don't take everything that the task force recommended. I don't think that they expected that all of their recommendations would be acted upon. But when it comes to providing a more stable revenue structure, one that is more predictable, one that is sufficient, but one that you get to by broadening the base and lowering rates where possible, that's what this does. That task force recommended letting that penny roll off, and we should. One of the places where we're an outlier in Louisiana right now is in the combined state and local sales taxes, where we're the highest in the country. We won't be after July 1st, 2018, when that penny rolls off. When it comes to rolling back certain credits, rebates, and exemptions that are not producing return on investment. That comes out of that task force. When it comes to making sure that the reductions to credits and rebates and incentives that happened in 2015 don't sunset on July 1st, 2018, that comes out of that task force. That task force was all about fiscal reform, both on the tax and the budget side, and this proposal that I put before you today is a very strong endorsement of that approach. So I guess I would just have to tell you that Lanny's wrong. Yeah.
Can you explain though where, I mean, I think a lot of people feel like the CAT came out of nowhere. A lot of legislators didn't seem to know it was coming until a couple weeks ago. It wasn't discussed thoroughly during the task force report. So I think there's a lot of confusion about when that came into play and why.
Well, it came into play because you've got to take a look at what you can do that both provides for a better policy, but that also you can pass in the legislature. Simply put, there was not an appetite, there is not an appetite in the legislature to do anything around the individual income tax that would produce additional revenue. And of the three legs on the stool, and there are more than three, but three primary legs on the stool that support state government in terms of revenue, you have the corporate income, you got individual income, and you got sales tax. We're losing a penny of sales tax. The legislature didn't want to do anything on the individual income tax, and that only leaves the third stool. It is a leg of the stool, however, that can certainly withstand the measures that we talked about today for the reasons that I talked about. And it became very critical to me, clear to me in conversations that I had with legislators in the House and the Senate, Republican and Democrat, independent alike, before, during, and after the special session this year as to what parts of the task force report they were willing to embrace and to move forward. And understanding where we were, I continued to meet with them. I had regional meetings all across the state in the last couple of weeks with a large number of legislators, and all of the result, I should say, of those conversations led us to where we are with this proposal today. You've already had one, Tyler. Yes, ma'am.
So you said that there are 389,000 small businesses that have less than 1.5 million in gross receipts?
Yes.
I'm wondering how many businesses that file under individual income tax will be subject to both the CAT and individual income tax?
Well,
You mentioned that corporate income tax isn't going to be doubled, but what about that?
well, I'm going to make sure that she's listening when I answer this too. The 389,000 relates to business filings. So these were business entities that did file a business return with the state of Louisiana. There are some businesses that do not, single-member LLCs, for example, some partnerships. Those entities would pay the commercial activity tax. That tax would not flow through to their personal line because they're going to show it as a business. That's right. It will be deducted from their individual tax. You asked a compound question a while ago, so all right, Tyler, what you got?
So business community is going to say to you that this is the wrong time to be having businesses pay more when the state's economy weak. They're going to say that your plan is going to discourage investment in the state. What would you say to that?
I would say that that's wrong. Let me tell you, I meet with CEOs all the time about their plans to either expand operations in Louisiana or bring new operations to Louisiana. And many of them and I have a conversation about what leads them to locate in a certain place. They want predictability and stability. And in many, many cases today, they have been deciding to expand or set up operations in states where the tax burden is higher than it is here in Louisiana because they know that it's stable. And they can have a long-range business plan that accounts for that expense associated with taxes. They also know that they're going to get a educated, trained workforce. There's going to be a quality of life for their employees. There's all sorts of things that go into that. And I will tell you that there's nothing in this proposal, especially when you consider that for many of the business entities that will pay the commercial activity tax, it will function as the equivalent of an alternative minimum tax. There's nothing in here that is overly punitive, and we recognize that, as I said before, that there are some businesses that have a high volume of gross receipts but have a low margin. That's the business plan. We will be coming out with an alternative measure by which they will pay the commercial activity tax as well to make sure that that's fair. Yes, sir.
Governor, I know you touched on the sales tax, the services, but I was hoping you could expand on that a little bit more. Are you going to be throwing a very wide net like we saw Bobby Jindal try to do, and are we looking at a lot of professional services?
No, in fact, professional services are not. This is, again, modeled after Texas. It's the approach that was embraced by the task force. I don't believe there are any professional services, whether they're engineers, architects, CPAs, doctors, lawyers, that would be taxed under the proposal.
We are taxing authors.
Yeah, and I want to make sure that, huh?
Landscaping.
Yeah, so landscaping perhaps would be, I think, repairs on non-residential structures would be.
Debt collection.
Debt collection would be subject to the sales tax. But there's nothing, this, if you go back and look at the task force report, all of this is very clearly spelled out. I mean, there's nothing mysterious about which services we would include. Yes.
One of the other complaints that was expressed with the task force was that there was a lot of focus on tax reform and not budget reform. Is there going to be more to that, or is
Yeah.
98%?
Well, first of all, there were a number of issues that I talked about our budget reform. Anytime you take and reduce a tax expenditure, you're reducing spending. That is budget reform, especially when you do that for credits, rebates, incentives that are not producing an adequate return on investment. I also mentioned one of the most important budget reforms that the state could undertake at this time, and that is making sure that as we go forward, and REC recognizes revenue that will be incorporated into a budget, that when we are able to do so, we only incorporate 98% of the revenue, have a 2% holdback. If you just round up to $10 billion, that's $200 million that is available for perhaps a disaster that you have to respond to, or to a revenue shortfall that's unexpected in the mid-year, so that you can go there before you go to the rainy day fund. Under the best possible case scenario, you would end the year with that 2% still intact. It would count as surplus, and then the only thing you can do with it is what the law currently spells out that you can do with surplus, such as pay it towards the unfunded accrued liability of the pension system, pay it towards other state debt, and give it to the rainy day fund, or for capital expenses of the state, but not recurring expenditures. Those are the sorts of things that we need to do to reassure our credit rating agencies that the state of Louisiana is going to move forward in a responsible and prudent way that would inspire confidence in the markets in Louisiana. Anybody else? Melinda.
I didn't see either the gas tax or the film tax credit program on this list. How are those going to be dealt with, and are they going to be part of your package?
They're not part of the package. The gas tax, I'm expecting members of the legislature will come out with their own proposals, and as I have said publicly, I will support any proposal that is consistent with the Transportation Task Force. And I think you're going to see various members come out with different amounts, for example, and different ways to structure that. With respect to the motion picture investor tax credit, I think you're going to see a situation where there were $211 million paid out in the current year, and that amount will go down to the hard cap of $180 million, so there'll be a $31 million savings on that program year to year. And within the program, you're going to see some changes designed to make sure that there is a greater return on investment by making sure, for example, that money within the cap, so not additional money, will be used to make sure we have more permanent Louisiana employees as a result of the motion picture investor tax credit and that industry being in Louisiana, to make sure that we have more of an indigenous industry that takes root here. I think you're going to see an opportunity to spread that cap around to more projects by limiting the per project cap to $20 million rather than $30 million, which is currently the cap. So you're going to see some changes within the program, but not a change to that hard cap of $180 million, which is a back-end cap. I think you may see an effort to, over time, move that cap to the front end so that we're not certifying more credits in any given year than we're willing to pay. So that's what I expect to see on the motion picture investor tax credit. Yes, sir.
Mr. Governor, how much would the state lose as they phase out the corporate franchise tax over the next 10 years? How much lost revenue does that account for? How exactly would that work?
I think, well, the phase out would occur over 10 years. For the most recent years, $277 million for the last year that we have the full records on for the corporate franchise tax. So that would be that's the number we have today. Now, corporate franchise tax is being collected this year, and that number may be different by the end of the year, but the only number we have right now is 277.
All right, last question.
This is the last one, Tyler, for me at least. Yes, sir.
Your plan has a very important component involving business. Can you identify any business groups that are in support of what you're planning to do? Is the first question that I wanted to ask. And the second is, can you go through with us and help us understand what do you need 70 votes for, what needs the public approval, and what needs 53 votes? And I'm speaking just of the House.
Yeah, well, the easy part is the public approval. I think the only two things that would be put to a vote of the people are the constitutional changes on the deductibility of federal tax liability for individuals and corporations. And I think that would probably be put into one constitutional amendment. But the people of Louisiana would have to decide whether they want the lower rates, and if so, they have to give up that deduction to get to them and get to what would, in effect, be a tax cut on 90% of the individual income tax payers in the state of Louisiana. Now, that you asked, I think, a three-part question that time, Tyler. So that was the last one. That is the one that I remember. Now, what was the other question?
Can you help us understand of the other parts, components of your plan? What needs a
Oh.
two-thirds vote in the legislature, and what needs a simple majority?
Well, to create the new tax, the commercial activity tax, that's going to require a two-thirds vote. Any of the measures that would take and reduce an exemption, a credit, a rebate, that would require a simple majority vote. To eliminate any of those, I believe, requires a two-thirds vote as well.
And the final part of my question had been, can you identify any business groups that are publicly supporting what you want to do on corporate gross receipts tax?
Well, it's hard for me to say that somebody supports a plan that I announced just a few moments ago. I can tell you that we have business groups all across the state of Louisiana who support what we are trying to do, and we've been working with them for months. When it comes to, for example, broadening the base, lowering the rates on individual income tax, corporate income tax, on the sales tax, rolling off that fifth penny, taking a hard look at all of these credits, rebates, and incentives, repealing some, shaving some others, sunsetting all of them so that at some point they all get looked at. I can tell you that when it comes to repealing the corporate franchise tax, that is something that they support as well. But I am not here today going to tell you that a specific group supports the activity tax, the corporate activity tax, because that is a relatively new creation. We have been talking to business entity groups all around the state around the general approach to a gross receipts tax. And there are some entities that are clearly supportive of that approach, I believe. but maybe a little bit different. The presentation to them was a little different than what I presented today. Thank y'all very much.